Most traders enter the market with a simple expectation: make money quickly. They open the charts, they look at price, they take trades, and they believe that if they can just win a few times in a row, they will finally succeed. But after some time, something starts to happen. They win one trade, they lose the next. They feel confident one day, they feel doubtful the next. Their emotions go up and down, their behavior changes, and slowly, they begin to realize something very important. Trading is not just about strategy, it is about psychology. In this video, I want to explain something deeply important: the psychology of long-term trading success. Because long-term success is not built in a single moment, it is built over time, through discipline, through patience, through emotional control. If you stay with me until the end of this video, you will understand how profitable traders think, how they manage their emotions, and how they build consistency over months and years. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on discipline, psychology, and long-term consistency. Now let us begin with a simple truth. Short-term thinking creates emotional decisions. Long-term thinking creates disciplined behavior. When you think in the short term, every trade feels important. Every loss feels painful. Every win feels exciting. And this creates pressure. You feel like you need to win. You feel like you need to recover losses quickly. You feel like every decision matters immediately. And because of this, your emotions start controlling your actions. Now let us look at how long-term traders think. They do not focus on one trade. They do not focus on one outcome. They focus on a series of trades. They understand that one trade does not define them, and this removes pressure. Now let us go deeper. Why is psychology so important in trading? Because trading is decision-making under uncertainty. You do not know what will happen next. You can only manage your actions. And when emotions take control, your decisions become unstable. Now let us talk about fear. Fear is one of the strongest emotions in trading. Fear of losing money, fear of missing opportunities, fear of making mistakes. When traders operate from fear, they hesitate. They exit trades early. They avoid taking valid setups. They lose confidence. Now let us talk about greed. Greed pushes traders to take more risk, to hold trades too long, to chase profits, to overtrade. Both fear and greed create imbalance, and imbalance destroys consistency. Now let us talk about how professional traders manage these emotions. They do not try to remove emotions. They manage their response. They follow rules. They trust their system. They stay disciplined. Now let us move into real trading examples. Imagine a trader who focuses on short-term results. They take a trade. It loses. They feel frustrated. They take another trade immediately. They increase their risk. They try to recover quickly. This leads to more losses. Now imagine a long-term trader. They take a trade. It loses. They do not react emotionally. They accept the loss. They follow their plan. They wait for the next setup. Their behavior remains stable. Now let us consider another situation. A trader takes a winning trade. They feel excited. They increase their risk. They take more trades. They become overconfident. Then they lose. Now imagine a professional trader. They take a winning trade. They do not change their behavior. They keep the same risk. They follow the same process. They remain calm. Now let us go deeper into long-term thinking. Long-term traders think in probabilities. They understand that not every trade will win. They understand that losses are part of the process. They trust their system over time. This mindset removes pressure. Now let us talk about patience. Patience is essential. You must wait for your setups. You must avoid forcing trades. You must allow the market to come to you. Patience is not easy, but it is necessary. Now let us talk about discipline. Discipline is the ability to follow your rules, even when it feels uncomfortable, even when emotions appear. Without discipline, consistency is impossible. Now let us talk about consistency. Consistency is not about winning every trade. It is about behaving the same way every time. It is about following your process. It is about controlling your emotions. Now let us go deeper into behavior patterns. Most traders repeat mistakes. They overtrade. They increase risk after wins. They panic after losses. They change strategies. Why? Because their psychology is unstable. Professional traders focus on correcting behavior. They review their trades. They identify mistakes. They improve gradually. Now, let us talk about mental frameworks. The first framework is process over outcome. Focus on execution, not results. The second framework is long-term thinking. Think in months and years, not days. The third framework is emotional neutrality. Stay calm, stay balanced. The fourth framework is probability thinking. Accept uncertainty. Trust your system over time. Now, let us talk about practical exercises. One powerful exercise is journaling. Write down your trades, write down your thoughts, write down your emotions. This builds awareness. Another exercise is daily review. Ask yourself, did I follow my plan? Another helpful practice is setting clear rules. Define your strategy, define your risk, define your behavior. Another exercise is limiting your trades. Avoid overtrading. Focus on quality. Another important exercise is slowing down. Take your time. Do not rush decisions. If this video is helping you understand trading psychology, consider subscribing to Bull Mindset.
Because mindset is the foundation of long-term success. Now let us go even deeper. Long-term success is not about avoiding losses. It is about managing them. It is about controlling risk. It is about staying consistent.
Now let us talk about confidence. Real confidence does not come from winning trades. It comes from following your process. It comes from discipline. It comes from consistency. Now let us talk about growth. Growth in trading is slow. It is gradual. It takes time. It requires patience. It requires discipline. It requires emotional control. Now let us talk about identity. Professional traders see themselves differently. They see themselves as disciplined individuals. They see themselves as risk managers. They see themselves as consistent operators. This identity shapes their behavior. Now let us expand this idea further. Long-term trading success is not about being perfect. It is about being stable. You will make mistakes. You will have losses. You will face uncertainty. But your mindset must remain steady. Now let us talk about emotional recovery. After a loss, do not rush. Take a step back. Reset your mind. Return to your process. This helps maintain stability.
Now let us talk about focus. Focus on what you can control. You cannot control the market. You cannot control outcomes. You can only control your actions. Now let us move toward the final message. Trading is not about quick success. It is about long-term growth. It is about building the right mindset. It is about controlling your emotions. It is about following your process. Let me leave you with one final thought. If you want long-term success, focus on your psychology, focus on your behavior, focus on your discipline, because when your mindset is strong, your results will follow. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.